Hello everyone, my name is Mohit Banwari and I am here to tell you what is stock market. In today's time, wherever you go, either on LinkedIn, YouTube, when you talk to your friends, colleagues, everybody is telling you invest in stock markets. But you may be wondering what exactly is the stock market and how does it work? So let me tell you the story of stock market. Let's begin. What is stock market? Let's imagine there is a company which produces a lot of clothes. Now, this company is facing increased demand from the market for its clothes. So the company thought, I need money to produce this extra clothes. If company needs money, there are two ways of raising money. One is it can go to a bank. If it goes to a bank, ask the bank that I need money, bank will come and say that okay, I will give you the money. In return, you have to pay me 4-5% interest rate, right? And a fixed EMI each month. Uh, let's say the company does not want to take that option of a fixed EMI every month. So company can go to public and ask them for money. If the company goes to public, right, the company will go to the public and say that hello, mm, this is my company. We produce textile products and we are looking to increase the production of our factory to cater to the increased demand in the market. So I need X amount of money. This money will be used in production facility, etc. Right? And based on this, we will increase the revenue for year one, year two, and year three. Document which says that if my company is, let's say, 100%, I am owning 80%, 70%, whatever is the agreement, and 20-30% will be the holdings of the public, right? So this 20-30% will distribute in multiple shares, or as we like to commonly call as a stock, right? It's a different name for a share. So this stock or a share is going to get distributed as per what the company decides, and this each share will go to the different people who's owning them, right? People can own one share, two share, or more than that, depending on how much they're willing to put the capital in for. So let's say the company produces the share. Um, the people agree to this deal and they will give them the money and the exchange happens. Company will get the money, the common people will get the share. Okay, and this is how the company will raise some money. Okay, and this entire process is called as initial public offering, IPO as we like to call it. Taking this money, the company will go and produce some goods and increase the production, increase the revenues and profits from there. And a part of this profit is given back to the shareholders in terms of either dividends, buybacks, bonuses, etc., and more. Right? And this is how the entire cycle works. Okay. All right. Let's say that the company is doing very, very well in the market. The shareholder is very happy about it, but for some reason they want to sell the share, right? There is some other person who wants to buy the share because he's very interested in this company and wants to be a part of it, right? So now this person who is willing to buy wants to find somebody who's selling the share, right? But where do these guys find each other? Is there a common place? Is there a common time where they can meet each other and exchange the shares? How does how do they know who owns which share? How is this a possibility, right? So they all came together and decided that okay, what we'll do is we'll meet at 9:15 uh, every day at Bombay, right? And we will call that a place and where we'll all meet and exchange shares. Whoever wants whichever company share, we'll exchange it and the money will go exchange. Okay. And this place now becomes an exchange, right? BSE or NSE as we like to call it, Bombay Stock Exchange and National Stock Exchange. So basically, exchange is nothing but a place where buyers and sellers meet to exchange shares for some money, right? And this trading happens at this location. This is what is called as an exchange. Okay. But you may think that some people will see this opportunity. Okay, if I can get money from the public and I don't have to pay them any EMI, right? I can take the money and go and run away, right? I can ask them, give me the money. Once they give me the money, I'm gonna go run away. So what happens if this happens, right? The common shareholders of the company will lose their money. Owner will run away with all the money. Company will file a bankruptcy, and nothing will come to anybody, right? So to protect people from owners running away with people's money, there came a regulatory body, a government regulatory body, which we call as SEBI, or Securities and Exchange Board of India. SEBI regulates this entire process of IPO. You need to follow the guidelines which are mentioned by SEBI. If you do not follow them, they will not approve your IPO. If you do not follow the norms which are mentioned, your company will be put into arrest. Okay, so you need to follow, if you're looking for public's money, you need to follow certain guidelines which are mentioned by SEBI. And SEBI does a very good job in India. Okay, so let's say after entire of this process, we meet at an exchange in Bombay um, to exchange shares of different companies for money. This entire trading happens, right? We're all meeting. In today's time, we use phones, laptops, etc. for our trading needs, right? Our phones are our Zerodha, Upstocks, and such kind of trading broker apps, right? Let's say that um, we there's somebody who has some money and wants to buy a share of a company. What will BSE, NSE, the exchange now becomes a platform where this entire trade happens. Let's say that there's a person who's looking to buy a share and there's a person who's looking to sell the share of the company, right? They will place an order that they are looking to buy or sell. This order will go to Bombay Stock Exchange or National Stock Exchange, right? What the exchange will do is map these two people, connect them, and exchange the shares, right? This is how it happens. As you can see here, the share of exchange happens through the Bombay Stock Exchange and National Stock Exchange, being these platforms, right? Now, if you take lots of people in the country, multiple of them trying to buy and sell this entire share, and this happens all in real time. Everybody is trying to buy and sell. The Bombay Stock Exchange and the National Stock Exchange will map these guys, match them, and help them make the trade so that the entire trading happens and keeps going. This entire process is called as the stock market. This is the market where this entire trading and exchanges happen, right? This is what is stock market. Now, if now when people come and say that, okay, I have, I'm okay to trade all these shares, but how do I judge the sentiment of the market? How is the market doing? What do I call stock market? How do I judge the performance of it? So what they said, okay, what we'll do is we'll take top 30 or 50 companies, right? We'll identify the different sectors of production in the country, match them based on their weightage, right, and come up with a unified price or a weighted price of that, right? So either 30 or 50 companies, the weighted price of those top 30, 50 companies, right, becomes the stock index, right? That's what we call the Sensex or the Nifty. It's nothing but weighted price of 30 or 50 companies, um, which identifies or which will tell you the best sentiment about the market, right? This is what is called a stock market index. Okay, so this is entirely about stock market, but you may be wondering what are the advantages of it, right? Why do we even need the stock market? right? And what do we have to lose based if we do the stock market, right? So there are some advantages, some disadvantages. Let's go talk about that. Advantages, right? It gives a source of capital for businesses. Companies, if they want to raise money, it gives them a source for it, right? They have a process, they have a regulatory to accommodate this entire process, and they can go to the public, raise that money, which is a government approved method. Okay, this is also a way for people to be part business owners, right? So now, once you go to a company and buy the share, you are a part business owner in that company. Another advantage is they grow you wealth, which will beat inflation. Inflation, what do I mean by that? Is inflation is nothing but the amount of the value of your money next year as compared to this year, right? So if let's say 100 rupees last year can buy you one packet of bread, one packet of milk, and some half liter of petrol, let's say, this year it's going to buy you little lesser, right? So the percentage of the amount which increases now for the same items is called as inflation, right? So it is very important to grow your wealth, which beats this inflation, right? And that's how you become richer, right? So this stock market provides you as an modern or a place to grow your wealth. Another advantage is you can start with the minimal capital. You do not need large amounts of investments to start in a stock market. Right? You can start anywhere, anytime, with X amount of money. You just need one phone or a laptop and just 500 rupees in your account to start with. So there's no requirement of this. Another biggest advantage, which most people do not talk about, is liquidity. Liquidity means if you are in need of money, you let's say that you have made some investment. Now, if you need money from that investment because of whatever emergency reasons, you can immediately liquidate your assets and raise money from the stock market. And this makes it a very, very big advantage as compared to real estate or FDs, etc. Real estate, you cannot go and sell a house in just one day, right? You cannot raise that money. If you want to do that, you're gonna take a huge loss, right? So in stock market, whenever you want it, you can just go and click sell. Next day, the money will be credited in your account, and that's one big advantage. There are some disadvantages as well. Disadvantage here is the stock market is going to have higher risk than FD, right? For obvious reasons, because the company can also not do well, right? The company can go bankrupt. And if the company goes bankrupt, the stock market, the stockholders will not get anything. So, in case of bankruptcy, stock owners get paid the last, right? So, this makes it a riskier investment. Another biggest disadvantage for common stock owners is it's very difficult to pick good performing companies unless you have a very good understanding in the business, right? Very good understanding of the markets and the stock performances, right? Only then it is you can pick good companies, but still it is extremely difficult, even with that knowledge and that level of skill set, to pick good companies, right? Now, this is the most important part of it. Why is this entire piece of it, or why is this entire stock market so important? Right? Why do we even need this in a country? Right? If this is a riskier proposition, why do governments even allow this kind of a mechanism to happen? Right? So let's talk about that. Now, let's say there is a demand in the economy for clothes of the company, right? If the company um, gets the money from public through the stock exchange via initial public offering, right? It will produce more goods, right? To produce more goods, it will give a lot of jobs, right, to new people. because it got the money, now it can afford giving jobs. This will create more jobs in the economy. More jobs means more prosperity among people. Prosperity will drive them towards making or spending more money in the markets, right? Markets mean your day-to-day markets, right? They will go buy more shoes, they will go and buy more um, clothes, more products, etc., and more. And this entire money rotates in the circle and thereby making the value of the gross domestic product higher. And this is how a GDP grows further in a country, right? And this makes the country grow faster. So this entire cycle makes it very important for any country to grow further. You see in a developed market such as USA, UK, Europe, in all of these countries, the proportion of people investing in stock markets is much higher than what India has. It goes to as high as 55% of population of USA invests in stock market, which is a very good number. So the country, if it has to do good, this entire ecosystem needs to work out. Companies need to get money to produce more and do well, and this is how the money flows to everybody. Okay, so this is why stock markets are so important for our country, and this is how it will help us grow our GDP. Right, that's it from my side. Please let me know in my comment section if you like the video, if you did not like the video, what should I do more, how can I improve better. Right, I talk to you guys soon. Thank you.